In our first video, we learn about budgeting, higher savings account, and emergency funds. Now it's time to apply what we learned. There are many banks offering higher saving accounts and some offer buckets. I personally prefer keeping my emergency fund in a separate bank account from my regular savings, so I'm not tempted to spend it. We also talked about tracking assets. An asset, in a financial sense to me, is something that holds monetary value and can grow in value or generate income over time without me actively working for it. For example, my retirement account is an asset. Now for the exciting part. Let's talk about investing, specifically investing in the stock market. To understand how it works, imagine walking into a magical dessert shop. Before we begin, what's your favorite ice cream flavor? Mine is a mint chocolate chip. Controversial flavor, I know. In this shop, every single dessert represents a different company you can invest in. Chocolate ice cream represents one company. Vanilla represents another. Gummy candies, cherries, or slice of cake represent completely different companies. If you decide to buy only one flavor, let's say chocolate, you are putting all your money into a single company. In investing, that is similar to buying a stock. Now imagine chocolate becomes less popular over time. Because of that, your chocolate scoop might lose a bit of its size or worth. In investing, this is similar to a company losing value, causing the stock price to drop. It is risky because your whole dessert depends on that one flavor. But instead of choosing only one dessert, you could buy a specific mixed scoop. This single scoop contains many different desserts mixed together. You get vanilla ice cream, chocolate ice cream, cherries, candies, and some cake together to form your scoop, instead of depending on just one flavor. You have a little bit of many different things inside the same scoop. That mixed scoop represents an ETF or index fund. And here's the important part. An ETF doesn't just mix 4 or 5 flavors. It actually can blend 500 to 3,000 different desserts together into that single massive scoop. Because there are thousands of pieces mixed in, each individual flavor only takes up a tiny fraction of a percentage of the total space. If one single candy or cherry flavor happens to experience a drop in value, it barely affects the overall scope. It takes up such a small part of the scope that you probably won't notice much change. The remaining thousands of ingredients easily carry the weight and keep your scope strong. This is called diversification. Instead of trying to guess the best company, an ETF allows you to invest in multiple companies at the same exact time, helping reduce risk. In this analogy, the dessert shop is a stock market. One dessert represents a company, a single flavor scoop is a stock, and a mixed scoop is an ETF or index fund. So let me ask you, would you rather risk everything on one flavor or enjoy a scoop made of thousands of different desserts working together? You do not need to master everything in one day. Start by understanding the basics. Focus on learning step by step and avoid rushing into things you do not understand at a basic level yet. Thank you for watching.